This is our Forex blog for January 20th, 2011, and this shows our currency meter, which most of us trade the dollar and yen pairs versus all the ones on the bottom. And basically you want to find a super strong currency in real time, like let's say the euro here, and trade it against one of them that's weak. The weekly and monthly trend is underneath the real-time trend. Today the dollar had been having a counter trend move up because it was down too much. There's a brief amount of weakness here in the yen. The weekly and monthly trend of this was down. It shifted up last night. The Australian was pretty weak. So you could have started the day off. Most of us don't trade the euro Australian, but if one of them's super strong, the other one's super weak, and the weekly and monthly trends support the strong one and the weak one, it's pretty much a no-brainer. You want to buy the euro Australian. And as you can see on the chart, this one was very strong. It made a higher high here, pulled back, and basically that is our system in a nutshell. You want to buy the strongest ones versus the weak ones on either pullbacks or multiple hour, or sometimes only an hour or two sideways consolidation. So this would be an example of a sideways, very narrow range consolidation, which got even narrower here. That breakout here is one instance of one of our systems, and then the pullbacks are my preferred favorite because usually markets move up, pull back a little bit, move up and make higher highs, pull back a little bit, the trends continue. So whether you got into that trade here and went up a little bit, you can see there wasn't that much statistical strength compared to the past. However, this trend, the euro was one of the strongest, the Australian was the weakest, and you can see the daily, weekly, monthly trend. This is one of the strongest weekly and monthly trends, and it continued up over 100 pips. Currency meter really makes trading easier. Now you can also see the CAD, Canadian dollar, was also very weak, and so you could have also bought the euro CAD. You're looking for buys. This one trended up, pulled back to the hourly. Whenever a currency finds support, the hourly usually continues up. You can see the daily, weekly, monthly trends up. You might have bought this breakout right here, or let's say you got into the trade right here. Your stop was underneath there. You might have got stopped out, then you had to re-enter, and you can see this one went from 14. Even if you got out of half your trade here at 40, you made 25 pips, and then maybe you made 50 on the other half. This one also didn't initially have super strong statistical strength, and this is an example here of sideways consolidation. You might have bought this breakout. This is a resistance area and likely to be the high, but because this one, the euro, was so strong all day and the CAD was consistently weak and the longer term trend supported, it's worth taking a trade, risking 10 pips with a good chance of making 25 pips. I'm going to go through all the currencies and highlight possible trades. Here is a fib level that I drew on the chart last night and showed up on your charts. If you're one of our mentor students, you have this. This is a pretty high probability place to buy if and only if the weekly monthly trends up, which in this case it is. When this was above the hourly earlier, after hitting it, you might have went long here, went up 10-15 pips, more than enough to move your stop to break even. Usually currencies that break above or below the hourly have continuation moves. I don't know if I would have necessarily sold this, but usually that trade works. If you have a false breakout above and then it comes back down, it usually continues. Keep in mind the weekly monthly trends up. Up, so you are fighting the longer term trend. Then when it came back here again, you might be a little bit more careful. You got into that trade here, and you can see it went up to the upper containment band. Fib targets make a great place to get out of trades. So you always draw your fibs on there. When they hit that level and don't have that much statistical strength, at the very minimum, exit half your trade, tighten your stop, and you might have got out of the second half with a little bit less. Notice you made a higher high here with almost no statistical strength at all. Usually our upper containment bands contain price. The market hits it, reverses. If it goes a little bit beyond that, it usually comes crashing down later. And so anytime you see it hit the upper white band with almost no strength, it's a good counter trend trade. And usually you want to look for a pullback to the hourly that usually finds support and then continues up. In this case it didn't. This one was pretty choppy today. Pound dollar, longer term trends up. So when it hit the lower containment band, counter trend buy signals, there wasn't that much weakness. You might have went long here, or better yet, wait for the 1, 2, 3 reversal pattern. Watch our video that explains that. Goes up, pulls back about half of the up distance, and there's green right here, which means the pound is getting strong against other currencies and the dollar is getting weak, and you bought right here. Only take buys at the bottom when it's not at or below the lower containment band if the weekly monthly trend's up, which in this case it is. Last night there was a beautiful NR7 breakdown short right here, and because you're going against the longer term trend, the first sign of it stalling, you want to get out, so you would have got out somewhere around 30. That was good for about 35 pips of profit. Notice there wasn't that much statistical weakness, and so therefore that trend wasn't likely to continue down. If you had missed this 1, 2, 3 reversal, one trade I like is when it breaks above the hourly. A lot of times it acts and goes sideways. When it breaks out of that, because the longer term trend's up, it's a very high probability trade, and it hit this weekly R1 pivot level with even less momentum than before. Anytime it's less than this dotted white line, usually trends aren't as likely to continue. But that's a nice 25 pip win while risking 10 pips. And many of us might have bought this little pullback right here, and the market went up enough that you would have moved your stop to break even. You can see there wasn't that much momentum on the way up. You almost have a double top with divergence right here. Once the market breaks back underneath the hourly and it retests it, I always wait, or I most of the time wait for a retest if the longer term trend's up. If the longer term trend was super weak here, I would just go short right here. But it comes back up, proves to you it can't get above the hourly. You go short maybe right here at 56, your stops maybe at 70, and then it's coming down. I would have probably got out of the entire trade right here because the longer term trend's up and made about 40 pips, and if the longer term trend was down, I would have sold this little sideways consolidation. If I'm only have 30 minutes or an hour to trade and I'm looking for scalps, I might take this trade here, but most of the time I don't take those. Obviously missed out on a really big move. If you would have drawn your fibs on here, you would have had a wonderful profit target to look for. Usually it stalls at the first or second, and if it does shoot through the second, at any instance of it going back up, you want to get out, because usually, especially when it's underneath the lower containment band, you're going to get a reversal. This one was off the charts weak, and if it wasn't, you might have bought this little 1, 2, 3 reversal right here. Obviously that trade still worked, but whenever it has this much momentum on the way down, you might want to avoid buying those. In this case, the daily, weekly, monthly trend's down. You might have gone short right here at the hourly. Notice on the way down it doesn't have that much statistical weakness, and the market pretty much goes sideways all day. Because the longer term trend's down, I would not expect this kind of a huge momentum move, but because it really didn't go down, it had no weakness, and it also double bottomed from today and yesterday. When it broke out above the hourly right here and the pivot level, this is your first profit target, this is your second, and in instances like this where they just keep going and going, wait for it to stall and get out of the whole trade. I probably would have got out of the whole trade somewhere around 24, in this trade around 65, over a 50 pip move. Now notice the trend intensity right here, off the chart strong. This is a pretty risky trade, buying a currency above the upper containment band when the weekly monthly trend's down. It's a 50-50 trade. Because there was incredible strength, it's very likely to continue its trend, but be very careful. If it goes up and kind of goes sideways, I probably would have exited the whole trade here if I had taken it. And you can see it went to the next fib level up here, and that was the high of the day. Because the longer term trend was down and extremely weak earlier in the day, and it's way above the upper containment band, pretty decent counter trend trade. Usually you can make 25 pips on those. This is a really good one because the weekly trend's up, and last night it had narrow range patterns right here and broke above this fib level. So it's above the fib level, above here, and the weekly trend had shifted up. This is a perfect example of a nice little multi-hour sideways consolidation breakout, and the first trade only went up about 10-15 pips. You might have made a few pips on that trade. Then it came back down, didn't make a lower low right here, and then broke out again. You go long. Notice how it hits the upper containment bands without that much strength. You might have got the trade here at 96 for about a 15 pip profit. I probably would not have bought this next pullback because it just didn't look like it was that strong. But once it went up and it had incredible strength, on this pullback I would have got in, maybe made 5 or 10 pips on that trade, and notice the statistical strength is over. It's above the upper containment band. You got major resistance above us. So it's a pretty high probability counter trend trade where you'd still be in it and be up about 20 or 30 pips. Notice the longer term trend weekly is up, so if it hits the hourly and stalls, I'd be out right here at 80. This one, the daily trend's down, the weekly trend and monthly trend was just slightly up. You can see it just exploded down yesterday, broke this fib level. Once a fib level gets broken, it's a very big sign of a continuation trade, and a lot of times when fib levels get broken, when they touch them, they oftentimes act as resistance now. So this is a great time to get short right here. And I probably would have got out somewhere here after an hour of it going sideways, waited for it to break down again, gone short, and you can see it just absolutely took off. Anytime it's underneath the lower containment band and goes sideways, I usually get out of the whole trade. I would have probably got out at 83, short here at, let's say, 30. So that's a 50 pip move. And when it's underneath the lower containment band, it is risky selling underneath there. If you're going to do it, be aware that most of the time you're only going to make 10 to 30 pips max. And only do it if the daily, weekly, monthly trend is down, which it is at this point, or at least most of the time only do it then, and you have incredible weakness at or above our dotted white 20 line. And again, the first sign of it stalling and going back up, or the IntelliTrend bar is going green, get out of the trade. As you can see, it shot up another 20 pips. Don't get greedy down there. If you can pick up quick 20 pips in 5 minutes, do it and get out. This is a trade that you really wanted to avoid until it broke this fib level. The longer term trend's down, we're underneath the hourly, so we're mainly looking for sells. This one really came down a lot yesterday and went sideways really for about 8 hours, 10 hours. So when it finally broke this low right here, it's pretty safe because fib levels act as support. You can see all last night acted as support, all this morning when it finally broke down. Whatever the amount of buying was there, it wasn't enough to cause it to go up. It just caused it to not go down. So everyone who bought there, once it did break down, was losing money. They all have to rush in and sell. So you know your profit target's the next fib level right here at let's say 80. You're likely to make 45 pips, and you did. Again, this is underneath the lower containment band. The weekly trend is down, so this is a little bit higher probability than the one we just went over. When it goes sideways for 30 minutes or longer and breaks down, you go short. But again, anytime it's underneath the lower containment band, first sign, counter trend buy signals right here, it starts to go up. You might want to get out here around 46. You didn't make that much. Actually, you made about 20, 25 pips. Like I said, most of the time they're this far underneath the lower containment band, you're going to get reversals. So don't be greedy. This one has a weekly, monthly trend up. You can see it was, at the 50-day moving average, previous day's low. Lots of support right here. You can't buy right in front of major fib resistance. But once it goes up and hits it again and then finally breaks out, you might go long right here at 78. You got this as a profit target, this is a profit target. It went up without that much statistical momentum. So I would have been out of the whole trade right here. And then, really, I don't think I would have got back into this trade because there really wasn't that much statistical strength. But just as a note, if the weekly and monthly trend's up, usually the big moves happen in that direction. I don't think I would have bought this pullback, but once it went over the previous months and previous weeks high right here, this is a pretty decent place to get in. It's right at the upper containment band. If it was 20 pips above there, I wouldn't do this. This is your first profit target. Here's our next fib level, and you're in there. And again, plus 20 strength. Our trend explosion system is after a pullback like that, you want to get in, and usually you can make 20, 30 pips. Notice it's coming back up to the high with less momentum than before. You want to get out of the trade. You've probably been out of this 5-10 minutes ago for another 20, 30 pips. And if you're an aggressive trader, you might even look for counter trend sells there. A lot of times you'll take a trade, lose 10 pips, get in again, and make 30. That's just the way it is. And if you have the patience and discipline to skip the first trade, and then when it comes up again and can't make a higher high and go short the second time, you have a much higher win rate doing counter trend. But you'll occasionally miss some big moves. So I just usually, if I'm going to do counter trend, you got to take every trade. Here's one of the weekly, monthly trends up. Once it broke back above the hourly right here, this is a great trade because the longer term trend's up. The weekly trend's not so strong, but the monthly trend's super strong. And when it hit this monthly pivot level right here and didn't reverse, when it hit the hourly and didn't come back down, the previous trend was down, it's very likely to go up. So you get into the trade right here, your stop's right underneath the hourly. You might want to draw your fibs on this move right here and consider exiting right here. If it was plus 20 strength, it's probably going to go up to the 1.618. Usually, in my experience, the first fib target's the best target to exit if you have mediocre momentum. The longer term trends shift a little bit stronger. We have a multi 2 or 3 hour sideways consolidation breakout right here. This is a possible support area, but the next one's all the way up here. So you're risking maybe 10, 15 pips to make about 30, and that's exactly what happened here. And again, plus 20 strength. Our trend explosion system means wait for a pullback, get in. That one went back up about 20 pips. Really didn't make that much. Notice the strength wasn't there the second time, so it's pretty much a no-brainer. Again, counter trend traders, in this instance, selling the double top here with almost no strength, made a very quick 20 pips in about 5-10 minutes. So, half the time the first trade loses you 10 or 15, the second one works, and in my experience, and the other half of the time the first trade works. So if you're going to do counter trend, either take them all or don't do counter trend. This one, the longer term trend's down. We got major fib levels here. You might have sold hourly right here, and it went sideways. I would have exited this with a very tiny profit or mediocre loss. You don't want to buy the bottom because the longer term trend's down. And it really, when you have two fib levels this close together, it's pretty horrible trading most days. Because you have buying here, selling here. If you did buy this breakout right here, it's likely to find selling here, and there's major other resistance areas right above it. So when you're in, consider this driving in Los Angeles during rush hour. You're going to be going 2 to 5, maybe 10 miles an hour if you're lucky. It's no fun. You're not going to get anywhere, and it's a total waste of your time. Notice another perfect example of that. When you have two fib levels, markets tend to chop around. And notice, who would have made money on this? Not me. I would have lost money on this. Maybe you might have bought here, got out here, sold here, maybe made a pip or two, bought here again, maybe made 3 or 4 pips. It's a total waste of your time, which is what I just said on the previous instance. Stuck between major resistance areas, and especially between fib levels like this, it's no fun trading. On the flip side of that, you have, what was it, the pound yen? There's no fib levels. Once you break this, the next resistance area is all the way up here, 40, 50 pips away. This is a highway where there's nobody on it except you. You can go 110 miles an hour if you want to, driving in Montana with, apparently from what I've read, there's no speed limit. Again, notice between two fib levels, very choppy. Once it breaks above here, after going sideways for a while, you could give it a shot. It's likely to stall here at the next one. In this instance, it went a little bit higher up. I would have got out of the whole trade right here. Normally, I don't trade the dollar yen. It usually doesn't move that much. It's usually pretty choppy and horrible trader. But once it has this kind of momentum, you might occasionally break your rules by this little flag pattern right here, and the first sign of stalling. It's so far above the upper containment band. Get out of the trade here at 93. That's about a 20 pip move. That's pretty good for the dollar yen. And last but not least, CAD yen. Notice it's stuck underneath the fib level. We got a monthly pivot level, previous week's low, major support on the bottom. Once it breaks above here after going sideways, you might go long. This is your next profit target, and it went up there. Notice incredible strength on the way up. It's above the hourly. It pulls back. Because of the weakness on the way back, I'm going to be a little bit more careful getting in it. You go long right here. Be aware that the weekly trend's down, the monthly trend's barely up. So this is, your most likely profit target. I would have probably got out of the whole thing there at 80 or 85, whatever, for about 25 pip profit.